Hey, it's Danielle. Welcome to the free video. So today we're going to be talking about SMH. This is one of the semiconductor ETFs that I like to follow. As you can see, it was down about 1.4% today. SMH is one of the trade war's favorite victims and typically does fall when we have an escalation of the trade war. However, what you'll notice with SMH is every single time it falls, it rallies even stronger than what it fell. So that's exactly what I'm looking for. I'm looking for this to kind of even out. It really just depends. I talked about it in the premium video. You never know exactly where the low is going to be, right? But right here, I have a cluster of different support areas or support decisions, and they come between about 123 and 128. As of right now, we're holding above probably the most aggressive level, I would say, at 128. So typically what I do in that instance is I start building a position when the first area of support holds, and if in fact it does break and find a lower level, then I just continue to scale in. So for example, starting off with a third of a position right here at this first level of support, and then if we get another down day in the market and it falls down to 126, then add another third. And you get the picture, and then that way when it starts trading higher, then you can add your final third, and you've kind of scaled into a position in a relative strength sector that typically experiences some volatility, or what I like to call a sale, around a large macro event like the tariff trade war situation. So looking at SMH, what can you do with it? Well, first of all, you do also have this squeeze, so let me point that out. You see the last two times you had this consolidation breakout. So there's a couple different things you can do with it. Number one, you can just add it to your long-term account. I like just buying SMH in and of itself. In the ETF, you can see that you did have buyers coming in. It was pushed from 127.92 up to 129.37. So you already did have some buyers coming in there. The other thing that you can do is buy some options in SMH. So typically at Simpler, we are going to trade something a little bit more aggressive than just buying options on SMH. But for the options trader who would like something that's a little bit more conservative and you don't want to get into anything too crazy, buying some Delta 70 options on SMH is going to give you some leverage in the options market without having, as much exposure as you would if you just buy AMD. So what are the trade parameters? Well, my area of support is going to be 127. I would say my stop would be below 123. If you want to give it more room, 121. But that's why I said, scaling in. If you want to have a tighter stop, you could try doing it around 125 and see if that would be enough room. You just want to make sure you're giving yourself room to work. But as far as an actual trade, really going all the way out into January, especially when you're trading an ETF that can be a little bit slower, is going to be more beneficial. And I like to stick with the Delta 70s, Delta 60s, Delta 70s, right around in here. And you can see this one has quite a bit of open interest, and those are only going for about $6.50. So for something to go for $6.50 and have 45 days of life, I think that is a pretty solid trade. Now, the other thing that you can do is you can come in and you can say, okay, well, actually would rather come in and trade some of these actual chip makers. So what would you do in that instance? Well, you could go for Intel. I do like the consolidation here in Intel. My main concern is that because of this breakaway gap, it might pull back and at least fill to this area about 54.26. But remember, today we're starting to buy a little bit, but we're not being too crazy on the buy side because the market might still have a little bit of downside. So just keep that in mind as I'm going through these ideas. The next one is AMD. I love AMD, one of my favorite chip makers. I love the consolidation setting up. I love the ready aim fire buy signal, this oversold buy signal. I love the way that the candles are turning green today. I love the way that it was positive at the end of the day. So AMD looks pretty good. Again, it is a little bit more aggressive of a buy just because it's sitting on the 21 EMA. It would be more conservative to buy around the 34 or the 50, but again, you know, scaling. So I like those two. And then the next one that I'm watching is going to be AVGO. This one fell today as well. And this one has an upcoming earnings report and it has this consolidation as well. So AVGO does typically trade higher going into the earnings report. It was a little bit difficult to try to get in when it was so extended, but now that it's pulled back to the 34 EMA, this might be a great spot to start a position for a short-dated run into earnings. So beyond that, that's pretty much what I have for you today. If you want some more information, make sure you go to my newsletter. It is 100% free. You can go to www.5startrader.com. If you want to subscribe, you can subscribe right here and check out all of my different updates, newsletters, and see, you know, what I'm trading, get a little bit more information about the trades, the process, and everything else I'm doing. Beyond that, I hope you have a great rest of your day, and I will see you in the next one.